Where are you looking for value? And I guess, does this unwind in the growth trade continue?
Good morning, Juliette. Good morning to your listeners as well. I think COVID has led many investors to extend the time horizon that they're focused on. I think if you were to look at the on-the-ground situation in countries around the world, particularly in the West, but in some countries here in Asia as well, I think you would sense that markets are disconnected from reality. However, I think if you look at multiple sectors, we are seeing some signs of recovery, especially in the consumer sector. And in the long term, COVID has led to an acceleration of demand, an increase in the size of the addressable markets for many industries that touch on healthcare, on consumer, and that blend in technology. So we're seeing a convergence of all these sectors leading to multiple areas of opportunities.
So the tech-fueled rally then continues, and I guess where specifically within tech are you looking at as we try to see opportunities moving in 2021? We know the work-from-home trade has been so big in 2020, but we're also looking ahead to 5G and the likes of other growth areas too.
So I think the increasing adoption of 5G will accelerate the opportunities for work-from-home related companies, for consumer-facing technology companies, for e-health companies. Video gaming, this is an important year for the console gaming cycle. That will be a keen area of focus for us and for the markets in general. So I think there are plenty of opportunities for the long-term investors still on offer. I would encourage people, though, to not focus entirely on companies that end in .com, but some of the more traditional industries as well. There is value on offer in some of the automotive sector, some pockets of the automotive sector, in machinery and manufacturing. This is a broad-based value set that we are seeing beyond a small concentration of tech giants.
I wanted to ask you specifically as well which countries in Asia you see growth, because there has been such a dichotomy here as well in terms of how countries have fared with the virus. India, Indonesia and the like not doing so well. A lot of people going underweight these equity markets too, but you quite like India.
Sure. So let's start in the West. India in particular is of interest to us. If you look at, let's look at the percentage of the population that I think should and will have smartphone connectivity in the next 3 to 5 years. That is a hugely underpenetrated market. Overlay on top of that, the low levels of e-commerce penetration, and then the vast opportunity in the shift from unorganized to organized retail. You layer that on top of each other, and you see a very large growth set. And I think what's important is not to think of India or companies operating in India as the X company of India or the Y company of India and trying to place a framework applied from China or the U.S. on top of India. I think these will be organic opportunities that will be around for the very long term.
How does because it's Rishaad in Hong Kong, how does the spat between Beijing and New Delhi also dovetail into this, with perhaps now some of those opportunities arising in India, IT services we know, but enterprise software, things which perhaps were at the same time being occupied by Chinese companies that Indian companies now have a role to play in, and that could be hugely beneficial for investors?
Good morning, Rishaad. Nice to speak to you. So I agree with that totally. I think we are seeing that already across multiple sectors, whether it is agricultural equipment, whether it is drone technology, whether it is enterprise software and cloud technology. There's an increasing level of investment, both in volume and in dollar commitment that we have not seen before in India. And I think this is the reason why you're seeing India being so attractive for many companies that have developed very strong moats in the West. It's pretty clear from the headlines who's involved there, but I agree with that. There will be many opportunities in India for years to come.
Because then we come to the way that these markets are behaving. Well, till a few weeks ago, it looked like there was only one way, and that was to the upside. But people are now looking at the old way, linear, looking at things in a linear fashion in terms of valuations. But we have a world, as you put it, which is looking increasingly non-linear.
Yes, so I like that question. So the world, as you know, is and always will be very non-linear. Small things have very big impacts. And I think what investors are doing now, or people who have missed some of this recent rally and continue to miss it over the past few years are missing the fact that the financial world in particular is increasingly nonlinear. So if you look at the comparison of real assets to financial assets and the huge divergence there in the ownership and how quickly financial assets are increasing, if you look at the acceleration of market opportunities and growth opportunities brought forth by the current virus situation, that is nonlinear. If you look at the leverage being introduced into the system through central bank support, that is nonlinear. So when we look at traditional valuation metrics on a 1 to 2 year horizon, I don't think that fully captures the opportunities that are out there. And so I would like to say that we collectively as a team at M&G are contrarian optimists. We have staked our careers on the opportunities available in Asia, and we still think that for the patient investor, there's plenty to go.
All right, Vikas, a quick question here on, COVID has certainly probably accelerated trends which were prevalent before. So where are we with those? And do they also, at the moment, of course, fit into your investment strategy, which no doubt has also evolved given what's been going on for the last, 8-9 months?
So I would say that it is an across-the-board impact, and not just on revenues. I think what we are seeing and what's been very impressive for companies across the region, from India to North Asia to Australia and New Zealand, is the way CFOs and management teams have managed their cost structures. I think many companies will emerge leaner from this period. There will be long-lasting impacts on how they structure their costs and not just go after revenue opportunities as well. Now, to answer your question on the revenue side, e-commerce, I think, has been a clear winner. Video gaming continues to be a winner. Live commerce has been a trend that began here in Asia and is now spreading to the West. So I think in industry after industry, vertical after vertical, you are seeing this acceleration and this expansion, and it is set to continue. But again, I do want to highlight it's not just a revenue opportunity; it's a clear cost opportunity as well. So in the long term, anybody who has spent a lot of money on infrastructure, building out infrastructure, investing in R&D, I think that will be a very valuable moat and a very difficult moat to overcome.
Vikas, before we let you go, we do just want to get your thoughts on our MLive question of the day, and that is when markets are going to start to price in negative rates from the Fed.
Oh, I think you have many guests on during the day that are much more qualified than me for that. I'm not quite sure. I think, the way I would answer that is many years ago, if you look at where currencies were versus where they are today, or where interest rates were where they are today. I grew up in the U.S. in the 80s, and interest rates were double digits. The yen was north of 200. And as interest rates collapsed down to zero, as the yen moved from 200 to 100, the thought was, well, how will these companies survive? Companies adjust. We're looking for the best management teams with the biggest opportunities, and they will continue to win. So I'll defer to your other guests on that, but I would like to highlight that I think that the companies that we are seeing will adjust and they'll come out winners.